Senate Banking, Housing, and Urban Affairs Committee will come to order. The committee today, the hearing on reauthorization of national flood insurance, it will be in the hybrid format. This hearing is a continuation of our efforts to enact a long-term reauthorization of NFIP this Congress. Senator Toomey and I are both interested in finding a path as difficult and as convoluted as that has been on flood insurance through a number of Congresses. Flooding is the most common, most costly natural disaster. We know that, facing families, businesses, and communities. Our failure to combat climate change is only making it more common, more frequent, not just on the coast, but inland too, all over the country. We see that. This week in Montana and Wyoming, along the Yellowstone River Basin, one of our great national parks is shut down. Businesses closed, families forced out of their homes. The park director, I heard the other day on the radio, saying people should go home. Our colleagues, Senator Tester from Montana, Daines from Montana, Lummis from Wyoming know this too well. Flooding is taking families' homes and memories. It's wrecking their finances. It's shuttering small business. It's devastating entire communities. It's destroying infrastructure. Disasters fall often hardest on low-income families. They're more likely to live in floodplains and lowlands and communities that have fewer resources to prepare for and respond to them. No matter where you live, everyone pays for the financial fallout as the country spends tax dollars to help families and communities recover and as floods disrupt our economy. Just this morning, a baby formula plant in Michigan shut down again after flooding. Yet too many people in our government fail to acknowledge that climate change causes much of this. National Oceanic and Atmospheric Agency has predicted an above normal hurricane season for 2022. Halting the trajectory of our changing climate will be a long-term, multi-generational effort. We also need to help our families and communities become more resilient to the flooding we face now and in the coming decades, and whenever possible, avoid it altogether. NFIP is critical. It provides over $1.3 trillion, $1,000 billion in coverage to nearly 5 million homes and businesses in 20,000 communities. As we've discussed in this committee many times, NFIP is not just an insurance program. Its job isn't just to help with recovery, but to prevent and minimize the damage in the first place. NFIP combats the overall threat of flooding through four related components: flood insurance to help property owners and renters recover quickly, floodplain management to minimize the damage, including through the adoption of local ordinances and building codes, floodplain mapping to identify and communicate risks so we can mitigate or avoid hazards altogether, and mitigation to help protect and remove property from harm's way. The bipartisan infrastructure bill offers a down payment on new opportunities for communities to help homeowners out of harm's way. We need to do more. It means reauthorizing and strengthening NFIP, investing in flood mitigation because of repeated denials by members of the Senate and our failure to fight climate change. The investment in the infrastructure bill surely will not be enough. Last year, we heard from stakeholders and we heard from Fema. Today, we'll hear from additional stakeholders, including practitioners working with communities and families, and I thank the four of you for being here. I'm interested in the recommendations for ways we can help strengthen NFIP so it can provide reliable access to insurance for property owners and renters, so we can address affordability concerns, so we can ensure that more people are aware of their flood risks and insured against losses, and we can help communities reduce the overall level of flood risk through investments and improvement in mapping and floodplain management and mitigation. Next week, we'll once again invite Fema to discuss the status of the program, including ideas for long-term reauthorization and the implementation of Fema's new Risk Rating 2.0 initiative. 21 short-term reauthorizations, 21 short-term reauthorizations. It's no secret that NFIP has proven to be a challenge. It's a complex program with multiple goals, with implications for many of the things people care most about, their homes and their communities. I believe it's possible for us, however, to come together to reauthorize and improve this program. I look forward to continuing to work with Ranking Member Toomey and the members of the committee to strengthen NFIP in the country's comprehensive approach to mitigating flood risk through the reauthorization bill. Senator Toomey.
Thank you very much, Mr. Chairman, and I'm very encouraged by your sentiment about seeking to work together to get a long-term reauthorization in place. The last one was in 2012, and if you have pointed out, Mr. Chairman, Congress has repeatedly, time and time again, extended these short-term provisions to keep this program going. But the fact is, NFIP is a broken program. It's a heavily subsidized program, but it's fundamentally broken. Since 2000, NFIP has borrowed from the Treasury in 11 out of 22 years. So that means literally half the time this unsustainable insurance program actually requires additional federal taxpayer funds to subsidize policyholders. Today, NFIP's current debt to the Treasury stands at $20.5 billion, and that excludes the $16 billion that was arbitrarily forgiven in 2017. Now, some folks suggest that, well, NFIP policyholders are incapable of repaying this debt, so the rest needs to just be forgiven too. But before we consider such a drastic action, we ought to ask ourselves, how did we end up in this scenario in the first place? Well, the answer is relatively straightforward. NFIP systematically underprices flood insurance. And regrettably, it's the policies of Congress more than FEMA that are the root causes of the NFIP's challenges. FEMA has worked to improve NFIP by implementing a new price rating for flood insurance premiums known as Risk Rating 2.0 that would better align policyholder premiums with their actual flood risk. Risk Rating 2.0 is producing rates that are more equitable also by phasing out most of the NFIP subsidies. 23% of policyholders, over 1 million families, were overpaying for their flood insurance. These families will now see a decrease in their monthly premiums under Risk Rating 2.0. Compare that to only 3.8% of policyholders who will have an increase of more than $20 a month in their premiums. Risk Rating 2.0 is an important step in the right direction to not only a more fair NFIP, but also a more fiscally sound NFIP. Congress should work towards strengthening the Risk Rating 2.0 elements and eliminate any subsidies that do not align price with risk. As I stated at our NFIP hearings a year ago, I am ready, willing, and eager to work with our chairman and my colleagues to enact another long-term authorization bill. Let me reiterate several of my priorities for a reauthorization. First, I think we should encourage more private capital in the form of private policies and private reinsurance. My home state of Pennsylvania has been a leader in this front. It's my understanding that there are roughly 15,000 private flood policies in Pennsylvania. Private flood insurance brings more capacity to the market, may very well bring better products. My top priority for NFIP reauthorization is to eliminate any barriers that exist to obtaining private flood insurance. A second priority is to do no harm. We should be protecting the transition to actuarially sound premiums. Any effort to slow or interrupt that progress must be rejected, including proposals to lower the 18% rate on premium increases. Third, if subsidies do persist, they've got to be better targeted. FEMA is proposing a new means-tested assistance program for current and future low and moderate income households. I am open to finding ways to help current low-income homeowners afford flood insurance. Today, properties with subsidized NFIP premiums are overwhelmingly located in our wealthiest communities, and subsidized NFIP premiums are seldom in lower-income communities. However, let me be clear that any means-tested subsidy should replace existing cross-subsidies within NFIP. I acknowledge that over the past 50 years, NFIP has acclimated homeowners to a world in which these cross-subsidies are very prevalent. But adding another subsidy on top of existing cross-subsidies moves us further away from actuarially sound premiums. Fourth, we should improve communication with homeowners and home buyers, and I think the chairman alluded to this very point, so that they have a better understanding of the flood risks of the properties that they're considering buying or in fact own. A small step is to raise awareness on the true flood risk to new homeowners and renters. I was glad to see FEMA recently submitted to Congress an NFIP reauthorization package that includes several encouraging proposals. One proposal would prohibit coverage for a new category of excessive loss properties, which are properties that have flooded multiple times. This is a very good policy that's worthy of very serious consideration. As a general principle, we should not provide flood insurance subsidies that encourage people to live in a flood-prone area. While excessive loss properties are not the majority of homes in NFIP, they do constitute a highly disproportionate share of the losses. And it sends the wrong message when taxpayers are continuously footing the bill to bail out properties time and time again in these risky areas. Another promising FEMA proposal prohibits coverage for commercial properties and new construction in high-risk areas. This helps to mitigate the risk in NFIP by eliminating coverage in heavily flood-prone areas over time, and also encourages competition in the private market for non-residential policies. A long-term reauthorization must continue to move NFIP in a positive direction. I recognize that we can't fix all the problems overnight, but we should use reauthorization as an opportunity to move us in the right direction. In its current form, NFIP is bad for taxpayers who have to bail it out year after year. I stand ready to work with my colleagues to make it a better program. Thank you, Mr. Chairman.
Thanks, Senator Toomey. Thank you for the 5 witnesses for her, one calling from his office or home, I believe. Jana Henderson served as Director of Mitigation, the State Hazard Mitigation Officer at the Mississippi Emergency Management Agency since 2012. She helps communities implement mitigation and floodplain management plans, has worked more than 30 declared disasters, including Katrina. Thank you for joining us. Dr. Peter Van Doren is a Senior Fellow and Editor-in-Chief of the Quarterly Journal Regulation at the Cato Institute, an expert in the regulation of housing, land, and the environment, is taught at Princeton, Yale, and Chapel Hill. Welcome. Mr. Theodorou, Jerry Theodorou, is the Director of the Finance, Insurance, and Trade Policy Program at the R. Street Institute. He worked for the American International Group as a Director of Insurance Research at Conning, an insurance asset management research firm. Welcome, Mr. Theodorou. Mr. Douglas Quinn is Executive Director of the American Policyholder Association, where he assists victims of carrier-side insurance fraud. Mr. Quinn is a Marine Corps veteran who began his involvement with these issues after experiencing insurance fraud while rebuilding his home during Superstorm Sandy in 2012. An interesting path to being a witness here. Thank you. Professor Sam Brody is a Regents Professor and Director of the Institute for Disaster Resilient Texas at Texas A&M Galveston campus. He served as the lead technical expert for the Governor's Commission to Rebuild Texas in response to Hurricane Harvey. He is joining us, I believe, from Texas. Ms. Henderson, if you would begin, and thanks for your years of public service, doing this for more than a decade. So nice to see you, and if you would proceed.
Good morning. Good morning, Chairman Brown, Ranking Member Toomey, and members of the committee. My name is Jana Henderson, and I am very grateful to address this committee on matters that are extremely important to me and the state of Mississippi. As Secretary of the Association of State Floodplain Managers and the State Hazard Mitigation Officer, Director of Mitigation for the state of Mississippi, it is my goal to use all available resources when it comes to breaking the cycle of disaster damage and reconstruction. Unlike most states, Mississippi is unique in that the Office of Mitigation houses grants, mitigation planning, and floodplain management. While this may seem not very significant, creating a cohesive mitigation operation can prove to be very viable before, during, and after an incident. I am honored to testify on several mitigation efforts, including the Flood Insurance Program, a program that the Association of State Floodplain Managers and its members consider essential to our nation's flood loss reduction efforts. Our written statement identifies over 20 reform ideas for your consideration. The state of Mississippi has 334 participating communities in the National Flood Insurance Program and 31 communities that participate in the Community Rating System program. I am very passionate about the success of the NFIP, as I know firsthand how it has helped citizens to be more resilient and out of harm's way. However, oftentimes, local communities lack the capability to fully implement the program. It is not that communities are not willing. They sincerely know the importance of participating, but are only able to enforce the basic NFIP standards. Why? Well, in most rural and underserved communities, the local floodplain administrator is often an elected official, which can change each election cycle. Due to the uncertainty that often accompanies election outcomes, this causes a huge interruption in many national flood insurance programs. The state floodplain management staff continue to educate rural communities on the rules and regulations of the NFIP. However, With such a large area of communities not as advanced as others, it is nearly impossible to reach every community in a timely manner. According to Mississippi State University Extension Service, 54% of Mississippi's population is rural. This lack of local capability is harmful to the citizens when ensuring that they are building, renovating, or moving structures that are compliant with just basic NFIP standards. Some rural areas depend on volunteers to fulfill the floodplain administrator duties. How to enhance the local community's capability must be addressed to effectively enforce the NFIP, especially in social, economically disadvantaged areas. As much as the program grows for states, rural and local income communities remain underserved because of the lack of resources available to them. Incentives within the Community Assistance Program grant for socially, economically disadvantaged communities may be the key for better NFIP enforced regulations. It would be helpful to expand the CAP program and authorize this in the statute. Another noteworthy key point is there seems to be a disconnect between floodplain management and flood insurance emerging as FEMA implements Risk Rating 2.0. What is required for flood insurance does not always align with floodplain management. Effective floodplain management should impact insurance premiums. More cohesive training must be developed and delivered for floodplain managers and insurance agents. With Mississippi being deemed an advanced state by the Community Assistance State Support Services, the CAP grant, tiered framework system, we are committed to maintain our status by exceeding state transformation activities. In conclusion, the reauthorization of the National Flood Insurance Program will enhance a support mechanism for building state capability to efficiently and effectively assist communities to manage and mitigate their flood risk. Thank you.
Thank you, Ms. Henderson. Dr. Van Doren.
Chairman Brown, Ranking Member Toomey, and members of the committee, thank you for holding today's hearing and providing me the opportunity to testify before you. My testimony draws heavily on my published Cato policy analysis titled The National Flood Insurance Program, Solving Congress's Samaritan's Dilemma. So the question for the policymakers in this room is, who should pay for the damages caused by natural disaster? Historically, private charity played a very important role. Then Congress used to appropriate monies after floods occurred. Congress created the National Flood Insurance Program in 1968 to reduce post-disaster ad hoc federal aid and protect taxpayers while providing prospective flood victims financial protection against loss. Lawmakers intended for the NFIP to be largely free of subsidies, thus protecting taxpayers. The 1966 HUD Task Force report that gave rise to the NFIP originally estimated that subsidies of flood insurance premiums for existing properties would end after approximately 25 years. In 2015, the National Research Council said the expectation was that over time, properties receiving subsidized premiums would eventually be lost to floods and storms, and subsidized premiums would disappear through attrition. That has been partially fulfilled, but the hardest nuts remain. The percentage of structures receiving subsidies fell dramatically over the first 5 decades of the program. Some 75% of covered properties received the subsidy in '78, but only 28% in 2004, and now 13% in September 2018. In 2012, Congress reaffirmed their original intent to curtail NFIP subsidies by enacting the Biggert Waters Flood Reform Act. But in 2014, Congress retreated from the subsidy reform with the 2014 Homeowners Flood Insurance Affordability Act. Federal flood insurance was intended to reduce the use of post-disaster congressional appropriations for disaster relief and to impose the cost of rebuilding on owners through premiums. The Congress should re-embrace these goals. Thank you.
Mr. Theodorou, nice to see you. Welcome.
Thank you. Thank you, Chairman Brown, Ranking Member Toomey, members of the committee, for the opportunity to offer testimony on reauthorization of the National Flood Insurance Program. I am Jerry Theodorou, Director of the Finance, Insurance, and Trade Program at the R Street Institute, a nonprofit, nonpartisan public policy research organization. Issues in today's hearing are of special interest to R Street because since its founding, R Street has analyzed the Nfip, including contributing to development of the 2012 Biggert-Waters Flood Insurance Reform Act. We believe that a long-term reauthorization would afford Congress the opportunity to conduct thorough review of the program's performance and catalyze reforms. The Nfip was created with two main objectives: to encourage state and local governments to constrict development of flood-exposed land, and to provide flood insurance with equitable cost sharing between the public and private sectors. The two objectives have not been met. First, development in flood-prone areas is not constricted, it's expanding. The population living in coastal counties has grown by 15% since the year 2000. Second, there is not equitable cost sharing between the public and private sectors. The private sector administers the program, but bears minimal flood risk. Flood-related economic losses are rising. In the past decade, U.S. economic losses caused by flooding were $943 billion compared to $211 billion in the prior decade. In this testimony, we point to 5 areas that stand in the way of the Nfip achieving its mission and propose solutions. In one area, progress has already been made. The 5 areas are development of a private flood insurance market, reduction of subsidies, using actuarially sound rates, dealing with repetitive loss properties, and long-term reauthorization. The private flood insurance market is dwarfed by the Nfip. The private flood market measures $300 million in premium compared to the Nfip's $3.5 billion. Private insurers are unable to compete effectively with the Nfip because Nfip policies are largely priced below actuarially sound rates. If private market insurers competed with the Nfip on the basis of rates, they would operate at a loss. The private market for flood insurance can be encouraged by Nfip pricing reflecting actuarially sound rates. If Nfip rates were risk-based, private insurers could compete on the basis of service and product offerings. Nfip policies are rigid. For example, the Homeowners limit is $250,000. Private insurers would be able to offer more choice, more coverage, more deductible options. The practice of subsidizing premiums sends false, market-distorting price signals and encourages unsound behavior, such as building in coastal areas. Fema subsidies should be replaced with means-tested assistance programs. Means testing would allow low-income policyholders with properties in high flood risk areas to afford flood insurance. The most significant development in the recent history of the Nfip is the introduction of Risk Rating 2.0, replacing the legacy Nfip rating methodology. Risk Rating 2.0 went live for new business last October and for renewal policies in April of this year. Risk Rating 2.0 equips the Nfip with sharper tools to address inherently overpriced or underpriced business by incorporating more flood risk variables into risk calculation. It is a step in the right direction. Among the most significant contributors to the Nfip's poor financial results is properties with numerous losses. Repeatedly flooded properties account for only 1% of Nfip policyholders, but close to 40% of flood loss dollars. Cumulatively, repeatedly flooded properties have cost the Nfip over $12 billion. The most recent reauthorization of the Nfip was in 2012. The Nfip's 5-year reauthorization ended in September of 2017, and since then, as we heard, it's been extended with 21 short-term extensions. Congress must reauthorize the Nfip by September the 30th to avoid a lapse in authority. We believe that a multi-year reauthorization combined with substantive reforms will enable the Nfip to continue its good work to reduce flood risk. Thank you, and I look forward to your questions.
Thank you, Mr. Theodorou. Mr. Quinn, welcome. You're recognized.
I'm Douglas Quinn, director of the American Policyholder Association. We're a nonprofit watchdog group that tracks and reports criminal fraud perpetrated by insurance companies, as well as the engineers and third-party administrators they hire. I am also a victim of Superstorm Sandy, where I experienced engineering fraud like so many others. With me today is my daughter Megan, who had the last years of her childhood turned into chaos. Despite having $250,000 of flood insurance, it took us 7 years to rebuild our home. FEMA failed to pay us and other Sandy victims an honest claim in the aftermath of the storm. We need a resilient flood insurance program with integrity and affordability. Senator Menendez's bipartisan NFIP REACT can accomplish this. This bill eliminates fraud, waste, and abuse in the program, which is more effective strategy than raising premiums to offset costs. We learned from Sandy that without adequate protections, both the program and policyholders will be taken advantage of by unethical insurers, engineers, and defense attorneys. NFIP allows penalties for insurance companies that lowball claims, adds an independent appeals process, and allows FEMA to eject vendors who have exhibited detrimental conduct, such as the Nielsen Law Firm and U.S. Forensics Engineering, who were embroiled in the Sandy engineering fraud scandal. These companies are still earning millions of dollars to the NFIP program, even after a federal judge in Superstorm Sandy levied a fine for evidence of widespread fraud and covering up faked documents to cheat policyholders. The founder of U.S. Forensics, Gary Bell, has been linked in the public record to acts of defrauding homeowners all the way back to Hurricane Katrina. His company does this, and he has bragged to a reporter that more homeowners are forced to litigate for benefits, the more his company makes. NFIP lawyer Gerald Nielsen, whose law firm covered up instances of fraud, boasted he would bill $100 million to defend this conduct. Nearly $500 million was wrongfully denied to policyholders by companies diverting funds from victims and destroying lives to line their pockets. The head of claims of the largest flood insurer in the NFIP pled the Fifth Amendment when asked if his company participated in defrauding policyholders. CBS, 60 Minutes, and PBS Frontline reported on this scandal and questioned why these companies are still being paid today by the NFIP. This bill provides the mechanism to protect policyholders from such bad actors. NFIP Re provides savings by eliminating the fraud, waste, and abuse that has put the program deep in debt and ruined disaster victims' lives. Affordability and higher participation rates are critical to the NFIP's success. Rising premiums force people to drop coverage. Risk rating 2.0 is already creating problems. Next month, my flood premium will go up 14%, despite the fact that I rebuilt my house 10 feet in the air. Most policyholders will see their premiums increase by 18% this year, and many will increase by a compounding 18% year after year. FEMA's own study predicts that 20% of NFIP policyholders will drop coverage over the next 10 years. You cannot force working-class Americans to choose between flood insurance premiums and putting food on the table. We should not be pricing people out of their communities. Mitigation is another essential element of reauthorization that is addressed in the Act. A Wharton study shows that every dollar spent on mitigation saves $6 in restoration. We have to be proactive and make cost-saving investments in protecting our communities from disaster. In closing, the NFIP REACT would have made a huge difference for us after a flood destroyed our home. This is not just a New Jersey problem. I've been active in disaster zones all over the country, including Hurricanes Florence and Doren in North Carolina, as well as Laura and Ida in Louisiana. I am regularly face-to-face with disaster victims, and it breaks my heart to know so intimately what the next years of their lives will look like. NFIP REACT will not only save these victims years of struggle, but will also provide big savings to the NFIP as a national safety net that supports both resilient communities and consumer confidence. Thank you.
Thank you, Mr. Quinn. Professor Sam Brody is joining us, I believe, probably from Galveston. Professor Brody.
Chairman Brown, Ranking Member Toomey, distinguished members of the committee, it's a distinct privilege to participate in this timely hearing on the reauthorization of the National Flood Insurance Program and flood risk reduction in general. And I want to thank the committee for the opportunity to testify and share my experience. I've been teaching, researching, advising in the field of flood risk reduction for over 20 years. And my biggest concern is that despite our best efforts, the cost of flooding, the impact to communities is spiraling upward. Whether it's deluges like Hurricane Harvey in 2017, which pretty much broke every flood record, to chronic events that we see in the news almost every day. By all accounts, the problem's getting worse, and it's a national priority to reduce our losses. And we also know that these flood losses are spiraling not solely because of changing rainfall patterns, sea level rise, or climate change, but also the human-built environment. Parking lots, roadways, rooftops, and other impervious surfaces are fragmenting our drainage patterns and putting more water downstream, which means into people's homes. And this trend is especially problematic in urban areas where stormwater infrastructure is aging, under capacity, and in need of repair. So now's the time to make some important changes to strengthen the existing NFIP program. Right now, we're overemphasizing what I call a recovery approach to risk reduction. That is, we focus on payments and assistance after a disaster occurs, which stands in contrast to a proactive, protective-centered mitigation policy where the damage and losses are eliminating before a disaster occurs. So this reduces the strain on the fiscal coffers. It reduces the chance of this disaster loss recovery cycle. In Houston, for example, Hurricane Harvey in 2017 was the third time people had water in their homes in the same number of years. A proactive approach to flood risk reduction, in addition to the existing programs we have in place, I think is the only way we're going to get out of the spiraling upward costs of flooding. Fortunately, I don't think there's a need today to start entirely new programs and new legislative efforts. We have an existing program I want to point your attention to called FEMA's Community Rating System, CRS. It's been around since 1990, and it incentivizes local communities to adopt mitigation avoidance strategies in exchange for insurance premium reductions up to 45%. And so now we're balancing mitigation and protection with recovery, so our recovery programs become much stronger. So I've spent 10, 15 years studying the effectiveness of the CRS program, and the reason I'm proposing an emphasis and expansion of that program today is because it works. We did a comprehensive national study a couple years ago, my institute, and we found that CRS communities experienced over 50% reduced losses per year compared to non-CRS communities. That's an average savings of over $500,000 per community per year. And it's not just the program that works, it's what it entails. It tends to focus on what I call avoidance strategies, whether that's building higher freeboard above base flood elevation or peeling back from these vulnerable areas through open space protection. Freeboard elevating structures, we found on average saves a community over $800,000 per year nationally. The other reason I'm proposing an expansion of this program is because we're finding that community effort in mitigation translates into savings at the household level. On average in Houston, a community that pursues higher standards, a la Freeboard, translates savings, reduced losses to approximately $21,000 at a household level. So imagine you're living in a community, you've got reduced insurance premiums because your community's spending more effort on flood risk reduction, and you're also reducing your losses. It's a win-win. So that being said, I'm proposing that we expand our effort on a more protection-based approach via the CRS, particularly providing resources to local communities to have coordinators be in place to adopt and monitor these programs. Thank you.
Thank you, Professor Brody, for joining us. Let me start with you, Ms. Henderson. Lower-income homeowners often have fewer resources to mitigate their properties, making mitigation assistance even more important. Talk, if you would, about the barriers to lower-income homeowners or those with lower-value homes who are participating in these programs. What can we do to remove those barriers?
Thank you. There are several mitigation grant programs that are available for lower income homeowners. However, the cost share seems to be a hindrance to some of them sometimes. You know, some grants are 75-25% match. They just don't have the money for that. I know we're participating in the Swift Current program, and it has varying cost shares. So if homeowners have the opportunity of participating in these programs and they don't have to spend as much money, you know, to get out of a bad situation, that is one option. May look at some grants or something that has varying cost shares to be able, that the lower income can afford. With Swift Current, you also have 100% cost share. However, some of those homes are not going to be eligible. Maybe programs where those lower income families are eligible to participate in. That's going to be one thing. Another thing is if they do participate in these particular programs, they have know what happens after. You know, our funds, mitigation dollars, FMA dollars, they're there to actually elevate a structure or acquire structure from those low income families. But if they participate in these programs, they have nothing after. A lot of times their homes don't really qualify for a lot of money that they're receiving in pocket. And so they have nowhere to go. So they choose just to stay there and not participate at all. So looking at what happens if they do participate in these particular programs with the lower cost shares, that could kind of get some of these lower income homeowners that repeatedly flood, get them out of bad situations.
Thank you. Professor Brody, you focus on helping communities understand the interaction between changing climate and the built environment. This morning, as I assume you're aware, Abbott Lab formula factory in Michigan is shutting down again for weeks because extreme rain overwhelmed the community stormwater systems. You testified that the community rating system can boost awareness in community and citizen actions to lower flood risks. How do we help communities take advantage of community ratings so that we can reduce that overall flood risk, Professor?
The community rating system has several activities that provide incentives to tell the story of risk. Tell the story of risk to decision makers, to residents through better web-face programs, through hazard disclosure. In Texas, we created a website called buyersbeware.com, WHERE, and that's essentially Zillow meets risk so that a homeowner can log on and see the risk of flooding for their properties. And so this is translating the best technology and data and mapping services to something that's more actionable and interpretable. And so I really think communication through hazard disclosure, technical assistance, making both decision makers and residents being aware is critical. We know it works. We're doing it in Texas. Texas also recently passed the most ambitious flood risk real estate disclosure regulation in the country, which requires during the real estate transaction process, homeowners and buyers to be more aware of different features of flood risk, making better decisions and putting ourselves more on a path for flood resilience over the long term.
Thank you. Let me go to you for another question, Professor. Of course, knowing or might flood is key to being able to mitigate these risks or avoid them altogether. What are your recommendations for improving FEMA's mapping efforts to better inform communities and homeowners about the likelihood of flooding? And can FEMA's non-regulatory products under Risk Map actually help?
I do. I think mapping is critical and what should remain critical in the future. Where we can make improvements is not just spending hundreds of millions of dollars on better maps and models, but making sure those products are interpretable, understandable, and actionable to both decision makers and residents. So I think more work can be done, as FEMA notes itself, in communicating these products in a way that leads to more flood resilient behavior.
Senator Toomey.
Thank you, Mr. Chairman. Mr. Theodorou, in your written testimony, you highlighted, and I think you mentioned during your oral testimony, that while repetitive loss properties account for about 1% of properties, they absorb close to 40% of the flood loss dollars. It seems to me this is the heart of the problem here. You mentioned in your written testimony an egregious example of repetitive loss. It was a Mississippi home. It was valued at about $69,000. It flooded 34 times over the course of 32 years, and it cost the Nfip $663,000 in claim payments for a house worth about $69,000. This is ridiculous. But it's not the only example. We found several others. There's a property in Kingwood, Texas. It's valued between $600,000 and $800,000, so pretty nice house. Flooded 22 times at a cost to NFIP of $1.8 million in payments. Now, sometimes a picture is worth 1,000 words, and the chairman seemed disappointed when we last spoke that I wasn't using posters frequently enough, so I'm going to try to remedy that. These properties are meant to be representative. They are not the actual properties in question here, but there was a property in St. Louis, Missouri, valued at $90,000. It flooded 34 times, and it cost the NFIP $608,000 in claim payments. Now, the house on the left is not the house in question. It's meant to be a representative of a house in St. Louis that's worth approximately that amount. It actually looks a lot like the house I grew up in. $90,000 value and $600,000 spent to just keep on rebuilding this house. Now, my purpose is not to suggest that we should have simply bought that house for this family instead of repeatedly rebuilding this one, but that actually would be a much better outcome for the family in many ways, as absurd as that is. My point is, we have a very, very badly flawed program that spends money this way. And Mr. Theodorou, I wonder if you would address how important it is that we address this issue of the incredible number of repetitive losses that are nevertheless funded through this program.
Thank you, Senator Toomey, for the question. Indeed, this is a very serious problem. The numbers speak for themselves. To have such a small percentage of policyholders accounting for close to 40% of the claims dollars paid. And the reason why this is allowed to continue is because there are not incentives. The policyholders, the homeowners, are not communicated to through the message of rate, of risk. A private insurer would recommend measures for remediation, sandbags, sump pumps. There's numerous ways to flood-proof a home, not 100%, but to a large percent. So this is indeed an area that is contributing very strongly to the financial results of the program. So what should be introduced are incentives whereby if measures are not implemented, remediation and protective measures, then the premium would become prohibitively expensive. And as our witness from Mississippi has said, the grant programs that are available for the least able to afford the insurance to take those measures, means-tested assistance, so that they could execute those measures to reduce the risk, to mitigate, and in extreme cases, removal, elevation, demolition. The house that you referenced, Senator Toomey, in Mississippi, that's worth $69,000 and cost close to $1 million. If it were moved to a place that were above the base elevation flood zone, it would survive, and the U.S. taxpayers would have saved another
fraction of the cost.
A lot of money. Yes,
thank you. Let me address Dr. Van Doren. One form of subsidy within NFIP has been grandfathering, as you are aware. My understanding is that when flood maps are updated, FEMA allows some properties to retain their previous risk rating based on the old map, even when they know that that no longer accurately reflects the flood risk. Prior to implementation of risk rating 2.0, about 9% of NFIP policies had this grandfathered premium where they were certainly guaranteed to be paying much less than what the actual risk was. Could you speak about what the associated incentives are when you have this kind of grandfathering, and to the extent that Risk Rating 2.0 moves us away from grandfathering gradually, but it does, how important do you think that is?
Extremely important. Grandfathering is it's, as you said, the source of the problem. And once people are used to the kinds of subsidies they receive under grandfathering, the incentives for them to change their behavior are delayed. And then, as you said earlier in your opening testimony, your statement, the problem isn't FEMA, it's probably the Congress, which was when it's called the commitment problem in the economics literature. And so Congress is what's called time inconsistent. It says you need to be better in the future, and then once we get there, Congress says, oh, it's not time yet to be better. It's sort of like a weight loss problem, and I should know. I'm on the heavy side. And basically, it's always better to try to diet tomorrow than it is today. And the removal of grandfathering and the subsidies associated with repetitive losses it's a commitment problem. It's not a scientific problem. You don't need a PhD to understand what I'm talking about. It's when the Congress said in 1968, we want these subsidies to be gone within 25 years. Well, notice that was the early 90s, and it's just never the right time to get rid of them. And I understand the position of homeowners in floodplains. If I were there and I was subsidized, I wouldn't want to get rid of it either. But someone eventually has to stop.
Thank you, Mr. Chairman.
Senator Tui. Senator Menendez from New Jersey is
Mr. Chairman,
recognized.
thank you for holding this very important hearing. You know, I hear too often from both FEMA and special interest groups who are completely out of touch with disaster victims that premiums need to be raised sky high on policyholders to bring down costs. But these calls to raise premiums foolishly ignore the fact that FEMA's huge administrative costs should be reformed to provide premium savings. Insurance companies that bear none of the financial risk receive 30 cents for every premium dollar written as compensation. What's worse is that the insurance companies also get to use high-priced attorneys that drag out claims litigation and force FEMA and policyholders to pick up the tab. Pretty incredible. Mr. Quinn, do you find that policyholders are getting their money's worth on these administrative costs that they're paying for?
No, Senator. In most cases, and I will speak as a policyholder, we are outraged that our premium dollars are being wasted by engineering firms, insurance companies, and law firms who are committing fraud to cheat the program and cheat policyholders. We see this over and over, and certainly 30 cents on the dollar going to the right-your-own insurance companies, 10 cents on the dollar going to pay for the debt to the Treasury just to service the debt. How are you going to operate a program with 60 cents on the dollar, sir? So what we're finding is this program is not necessarily actuarially unsound. It's the fact that it's being bilked by politically connected attorneys, engineering firms, and insurance companies. And of course, the policyholders get to go for the ride.
My bipartisan NFIP REACT lowers their compensation, the insurance entities, to 22.46%, the same costs that FEMA incurs to run the program in-house. It also overhauls the claims process so that FEMA and government lawyers handle claim lawsuits so that they act in the best interest of all parties. We had outrageous realities of engineering companies who changed their studies in order to avoid payment, dictated by a federal judge in New York as such. We had lawyers who racked up huge bills, all to fight the policyholders. You know, FEMA's new Risk Rating 2.0 premium methodology is starting to take effect around the country, and Congress still has no idea how much in premiums FEMA will be charging our constituents. Here's what we do know. FEMA has projected that an overwhelming amount of policyholders will face compounding 18% per year annual increases for years to come. FEMA and CBO estimate that nearly 20% of policyholders will drop NFIP coverage due to risk rating 2.0. I mean, it doesn't take a rocket scientist to understand that insurance is about spreading the risk over the widest pool possible. 20% of the policyholders drop it. You have now dramatically limited the pool and you've increased the costs. Mr. Quinn, can working families handle these types of increases? What will happen to those families who are forced to drop their flood insurance coverage and later suffer damage in future disasters?
What we see, sir, is as premiums rise, more people will drop their insurance. 20% loss for the NFIP would be devastating. And it will certainly be devastating in the communities to working class families who have no insurance. And in the end, we shouldn't kid ourselves that we're saving money. When we lose these families, the federal government will wind up coming in later with aid packages. And certainly we know that mitigation is the solution, and having affordable premiums is a solution to having a viable flood insurance program.
Yeah, I want to talk about mitigation in the last minute or so that I have. Look, this doesn't even deal with people who have a mortgage in which they must have flood insurance in order to sustain their mortgage, or they're in default. I can imagine how many families in America we're going to put in default at the end of the day. Any long-term reauthorization must include robust funding for mitigation to decrease the risk profile of the NFIP and provide a sound financial path forward for families and the program. If we know right now which homes are most at risk, we shouldn't wait until a flood to step in and help. For every dollar spent on mitigation, it's been proven the federal government saves $6 on the back end. So, Mr. Quinn, as a homeowner, wouldn't you want mitigation assistance up front to protect your home rather than waiting until disaster strikes and finding yourself, as you were, someone who served our country as a Marine honorably, someone who went through Superstorm Sandy? You would have wanted to have mitigated the possibility of that risk for your home. Is that a fair statement?
Absolutely, sir, especially knowing the kind of devastation that families go through after they're flooded.
Well, that's why my NFP React boosts increased cost of compliance coverage and make it available for policyholders to elevate their homes, for example, before the next storm happens. In addition, our legislation repurposes existing post-disaster programs to make billions of dollars of mitigation funds available today. We're going to come in, when these disasters strike, have flood insurance, don't have flood insurance. You know that the federal government is going to come in. So why not mitigate before? I have one last question. I have the indulgence of the chair. FEMA has taken the unusual step of proposing an unsolicited NFIP reauthorization bill Congress. I find that interesting. When I looked through the text, it was familiar to me. That's because it mirrors the past administration proposal, as well as members who really have no desire to see the national flood insurance continue. One of FEMA's provisions is to bar new small businesses and vulnerable homes from any type of NFIP coverage. What would happen to communities if there was no longer NFIP coverage for vulnerable homes and small businesses?
Sir, I can't imagine why we would ever think to restrict small businesses and not encourage them to grow and flourish. Their impact on local communities, having local small businesses, is very big on the local economy, and certainly losing our small businesses or having them at risk for flood with no ability to recover afterwards would hurt communities that are impacted by flood.
Yeah. Thank you, Mr. Chairman.
Thanks, Senator Kennedy from Louisiana is recognized.
Thank you, Mr. Chairman. Dr. Van Doren, Mr. Theodorou, have either of your think tanks hired outside expertise to review the algorithm used by FEMA to set these new rates? Have either of you done that?
We have not.
No, we.
Why not?
I have read the.
I mean, why not? How do you know they're accurate? You don't know they're accurate.
Well,
because FEMA won't show them to you. If I refer to Milliman, I'm talking about a company last year had about $1.2 billion revenues, 4,000 employees. They're risk management experts. They represent large institutions, mostly insurance companies. Milliman designed this algorithm, did it not?
It's my understanding that Milliman did. I have reviewed the
Okay, that's
technical-
all I need. I'm sorry, I don't mean to cut you off, but I've only got 5 minutes. Who owns the algorithm? Does Milliman own it, or does FEMA own it? You're both experts. Do you know?
I would say it's the NFIP.
Do you know that for a fact?
I do not know that for a fact.
And you don't know that for a fact because FEMA won't share this algorithm with anybody. They tell you if we show it to you, we got to kill you. They won't even show it to Congress. But yet we're supposed to place blind trust in the federal government. What could possibly go wrong? Now, let me ask you a question. Mr. Theodorou, for whom I have great respect. I want to talk about the people that aren't in this 1% that have repetitive flooding. We can all find examples that make our point. Let me talk to you about these people who aren't in the 1%. Let's suppose, and this is pretty typical in my state, the people that buy flood insurance. You got a mom and a dad, and they each make, let's say, $40,000 a year. They have 2 children. They get up every day, they go to work, they obey the law, they pay their taxes, they try to do the right thing by their kids, try to teach their kids morals. They want their kids to have a better life than they have. They work their ass off. They live in a $200,000 home with a mortgage. And here comes FEMA with this magical algorithm that they won't show you. If they do, they have to kill you. And their flood insurance goes up 18%. And then it goes up the next year another 18%, and another 18%. And this is compounded. Okay? And they've never flooded. And then all of a sudden, the value of their home goes down. And they can't afford it anymore. And so they have to sell their home at a loss. And the mortgage company, which Milliman probably represents, gets a default judgment against them. And they're supposed to do what, Mr. Theodorou?
Thank you, Senator Kennedy, for the question. The data which have been promulgated by the NFIP using Risk Rating 2.0 show that the hypothetical family that you talked about would benefit from reductions in premium.
Yes, sir, but that's based on their algorithm. And they won't show anybody their algorithm. And if you trust government, Mr. Theodorou, particularly on this program, you failed history class. Now, this is not right. I want to see this program fixed. Maybe the way to do it is to expand the risk and add other natural disasters. Okay, but my mama didn't raise a fool. And if she did, it was one of my brothers. And when the federal government comes to me and says, we've got an algorithm designed by Milliman, I know Milliman, good company, making a lot of money. Their people don't make $45,000 a year. Neither do you, neither do I. But we're talking about real people here. And the federal government comes and says, we got this new way to price things, but we can't tell it to you. Do you think that's fair?
Senator Kennedy, the technical documentation for Risk Rating 2.0 is available in the NFIP.
Not the algorithm. Your think tank, you're both from extraordinarily well-regarded think tanks. You haven't even hired help to try to understand the algorithm. And you know why? They won't show it to you. Can I ask one more question, Mr. Chairman?
Proceed, Senator.
Why does FEMA,
I'll go next.
Mr. Quinn, repeatedly keep hiring these lawyers and engineers who act like thieves? How much did U.S. Forensic make last year off of FEMA?
I don't know, but I know they do very, very well, as does the Nielsen Law Firm, and they get paid quite well for perpetrating or supporting fraud, sir.
And they get paid for not paying claims, not for paying them, right?
That is correct.
Why does FEMA keep doing this?
We have asked that question over and over. FEMA has told us that they do not have the ability to remove these fraudsters from the program. The NFIP REACT gives them the mechanism to.
I know I introduced a bill to try to give them the authority.
Yes, sir.
Some of my colleagues don't want to support that bill.
I can't imagine the amount of wreckage that these organizations are doing in communities. I have personally lived through it. I've seen it in the bayous of Louisiana. I've seen it all over America.
You've seen it in New Jersey, haven't you?
Yes, sir, I have.
It's unconscionable
Yes, sir.
to have these outside entities that come in and repeatedly abuse policyholders, figuratively rape them. And FEMA keeps using them time and time and time again. I wonder why. Thank you, Mr. Chairman.
Senator Kennedy, we'll begin a second round. Senator Toomey will go, then I will go. We have a couple other senators that are coming back, and we will then conclude. Senator Toomey.
Thank you, Mr. Chairman. And I think this discussion this morning is underscoring the importance of having reforms built into a reauthorization. And one of them certainly should include an obligation for FEMA to fully disclose their methodology, their algorithms, whatever process they use to establish premiums, as well as these egregious problems that Senator Kennedy's alluded to. Let me ask you a question, Mr. Theodorou. If FEMA has a flawed methodology for whatever reason, and the result of that is the premiums are too high, what role could private insurance play as a mechanism of relief? If there were a vibrant, competitive private market, would FEMA really be able to charge an actuarially excessive premium?
Thank you, Senator Toomey, for the question. No, it would not. The competitive nature of the marketplace, competition would drive business to companies that would price it at a lower rate, which is not excessive. And I would say also that, why do we trust a report done by a consulting actuarial firm? The actuaries that do these kinds of contracts, these projects, are members of are fellows of the Casualty Actuarial Society, which has 4 operating principles. They include that rates are not excessive, they're not inadequate, and they're not unfairly discriminatory. And it's a profession, so they would be open to errors and omissions insurance.
And whatever the merits of that, it just seems to me there's a mechanism that we know works, because it works in every product and service that we have in our economy. A competitive private market ends up, competition drives prices down to something that generates a sort of standard rate of return, and you don't get to charge huge excessive prices, and neither would the NFIP, would it?
That's right, Senator Toomey. And if I may introduce a historical footnote, the first attempt to introduce a national flood insurance program in the Truman administration, Harry Truman, in the early 1950s, following the Midwest floods of 1951, indicated that there should be private sector participation with the government as a reinsurance backstop. And in the first 10 years of the program, from 1968 to 1978, there was private sector participation. After that, the program was put under FEMA, and NFIP bore all the risk. So the private market was there at some times, and in that period, it was run more efficiently. It did not have those kinds of deficits. So there is a precedent for the private market.
So the obvious question is, what drove the private market out of this space? And I want to ask Dr. Doren to also comment, but Mr. Theodorou, you can take a first shot at it.
Yeah, administratively, it was taken out of, I think it was Housing Urban Affairs, and put under FEMA, and the private market was taken out, and it was given the role of being a servicing agent to do the administration and not bear any risk.
Dr. Van Doren, what do you think about the ability of the private market to ensure that FEMA can't, that NFIP can't overcharge?
Well, certainly my understanding of FEMA 2.0 is that FEMA was very threatened by the provisions of the 2012 reform, which directed FEMA to allow private insurers to offer policies as long as they were equivalent to what FEMA offered. And FEMA knew, because of congressional direction, the cross subsidies within the NFIP system. And anyone it's not Econ 101, but a little beyond that, you learn that cross subsidies are not sustainable unless entry is restricted. So FEMA faced no competition, but then it did. And then everyone at FEMA said, oh my goodness, that their own data show that their policies in Texas, Louisiana, and Florida, the vast majority of single-family homes in those states were overcharged, and they knew that private competition would cherry-pick them. So FEMA 2.0 is actually FEMA's response to the possibility and extent of private competition. And again, the vast majority of policies under FEMA are actually overcharged, and then as you've stated earlier, a small minority of both repetitive flood of houses and people that live in floodplains are subsidized through these cross subsidies, but they're not sustainable in a private market.
Right. So I think the important bottom line, and I think you said it, is in a truly competitive market where there are not artificial barriers to entry, you can't sustain artificially high prices.
Right. FEMA 2.0 could be as terrible as the senator from Louisiana said, and if so, private competitors now allowed to come in will come in and make money and have FEMA's lunch.
Thank you, Mr. Chairman.
Thank you, Senator Toomey. Senator Tester is recognized from his office, I believe.
Yeah, thanks, Senator Brown. Look, if you've turned on the news, you know that my home state of Montana, the southern part of it, is seeing some pretty severe floods. And there's going to be more floods up in the northwestern part of the state. The Yellowstone River in the south is rapidly approaching record water levels and currently experiencing the greatest flood we've had in a couple decades. And to put on top of that, the smaller communities like Gardner and Mammoth and Livingston and Red Lodge, Cook City, they're all being blasted by this flood. Yellowstone National Park's closed entrances, and they will be closed all summer in the northern part of the park. Stillwater Mine can't get workers to the mine, and we've got a bunch of folks that have been airlifted because they've been stranded. So, Mr. Henderson, having been in similar positions many times in your home state, what's the most important things to do to get the recovery on track right now?
I'm sorry, I could barely hear the end of your question.
Okay, so the question becomes, Ms. Henderson, is having been in a similar position to this many times in your home state, what are the most important things that we need to be doing immediately to get recovery back on track?
Well, right now, the first thing is to make sure that the area is coordinating with the local floodplain administrators as well as your state floodplain administrators. And once that happens, then that coordination and your recovery can begin. It's going to be very, very important that the local floodplain administrator is on board with the local EMA director, because once the water recedes, that's when you want to get in to start looking at these structures that have been flooded. It's going to be really, right now is the time to start talking to them about mitigation efforts, to start talking to them about recovery. But that communication and that working together with those two entities, EMA and your floodplain administrator, that's the most important part in your recovery, not right now.
Okay. Mr. Brody, do you have anything to add?
I agree with the distinguished panelists, getting in as soon as possible, doing damage assessments, making that information available for other people to do further analysis to figure out how to recover, but also how to mitigate for the next time this happens, right? So not get into this repetitive flood loss recovery costing taxpayers more and more money. Think about what could be done upstream. Could we have protected naturally occurring wetlands, which hold, store, and slowly release waters? Could we have used parks associated with schools even to hold, store, and slowly release water, so you don't have this deluge going downstream and flooding properties, roads, and affecting economies? So, I'm all for recovery, but also focusing on mitigation so we don't have the damage. We don't have to jack up the insurance rates to make them actually sound as much. We kind of cut the head off the snake before we experience the pain.
I appreciate that. I'm sorry I joined this hearing late. Because it's a very, very important issue. Flood and flood insurance and climate change and the disasters that revolve around climate change, like we're seeing in Montana, is real, and it's part of the reason why we need to do something sooner rather than later on climate. I've also been involved with flood for the last decade and how we're going to get the flood insurance program solvent and how we move forward. And in fact, it's been about 8 years ago, in a bipartisan way, we had a proposal and it was gaining great steam, and it was to turn this mostly over to the private sector, if not totally over to the private sector. And where it lost steam was when the projection of rates came out and they were considerably higher than the rates we're be paying right now for flood insurance. And I would like Mr. Van Doren or anybody to respond to that. Because the reality is that if rates go up significantly, if this is privatized, it's going to be really tough politically to get this through. And by the way, from my perspective, personally, I'm in the middle of a drought, so I could use some moisture. Okay, so could I get somebody to kind of respond to that? They really think rates are going down, because that's not what the projections were a decade ago. And if it's not the projections now, what's changed?
My understanding, I mean, the 70% under FEMA 2.0, about 70% of the single-family homes that are insured, their rates will go up, and 20 some odd percent will go down. Ranking Minority Member Toomey has talked about the shift from general subsidies to some sort of means-tested subsidy as maybe part of the congressional solution to this dilemma.
Yeah, well, I appreciate that. And by the way, I do appreciate trying to find a solution, because there's a lot of taxpayer dollars that go into flood insurance. It just becomes really hard if we're really in earnest talking about rates going up significantly. With that, I'll kick it back to you, Mr. Chairman. Thank you for the opportunity.
Thank you, Senator Tester. I will do my second round as Senator Toomey did, and then Senator Smith may or may not arrive. We're not sure, and then we'll wrap up. Ms. Henderson, I would like to question you again, if you would. Senator Toomey noted that some lower value properties have experienced repetitive losses. You responded to me earlier that low value homes often don't qualify for enough help to allow the families to move elsewhere in the community. Could this be an example of why we should re-examine how we calculate mitigation assistance and cost share requirements?
Absolutely, yes, sir, it should be. Simply because in my state, we do have a lot of communities that have repetitive flooding, do not have insurance, and some do. They're willing to move, they're willing to participate, they just do not have the funds. So yes, sir, absolutely, we should relook at how we offer mitigation grants, or just mitigating period, especially to those areas that are low income and disadvantaged areas. We do have a particular area where we did buy out a lot of homes. We did have more properties that wanted to participate. This particular grant that they were participating in was a 75-25% cost share, yet some of the homes only valued at maybe $10,000, $12,000. So once you're looking at that homeowner paying 25% of that, they actually had nothing. They had nothing that they could go and buy another home with, buy another home for. Oftentimes, there are other grants that we can partner with local governments, for instance, the Community Development Block Grant, but by the time our funds kick in, those grants are already have been allocated because of our slower process when it comes to offering mitigation grants. So I think in addition to looking at the cost shares and looking at how we actually offer those grants, we might want to look at as well the timing of those grants.
Thank you.
That they're being offered.
Thank you. A couple of the 5 witnesses have spoken about this, about the pilot program called Swift Current. Mississippi is one of 4 states in that flood mitigation assistance pilot. Its goal is to speed up offers of mitigation so they can help homeowners while they are still recovering from flooding rather than well after an issue. Mr. Quinn certainly more than touched on. Ms. Henderson, do you expect that the pilot will expedite the mitigation process, will reach survivors soon after the disaster?
The SWIFT program is an excellent program. The timing of it is a little off for the state of Mississippi simply because it was supposed to have been after Hurricane Ida. Speed it up, yes, I think eventually it will. However, we have run into some challenges. And one challenge is the local communities receiving the actual information, the critical information, the data that they actually need to be able to offer the homeowners this grant funding. For instance, the repetitive loss list and severe repetitive loss list. You know, that information, we have to ask for it. It's a delay in them receiving it. I was just talking to a community last week. They asked for this list over a year ago, and they've not actually gotten it. I can say that SWIFT is supposed to speed that process up. I have not witnessed it yet, simply because we're early into the SWIFT grant program. So I'm going to be anxious to see if indeed the intent of SWIFT really happens.
Good comments. Professor Brody, last question. Too often we hear that homeowners or renters had no idea their properties had previously been flooded. Talk to us about the benefits of real estate disclosure. Senator Kennedy mentioned some comments about that. Real estate disclosures for renters and property owners. And speak, if you would, during that answer. And you touched on it in your testimony about the Texas real estate disclosure law that came out of the Governor's Commission after Hurricane Harvey, if you would, Professor.
Yeah, you know, we're big believers in getting the right information to prospective homeowners, buyers, renters, so they can make the best decision possible. And there's a lot of distortion in the communication of flood risk, particularly down at the household level. My institute's done a lot of work, and there are other groups out there trying to get the best information about flood risk, previous flood history, which is one of the best predictors of future flood risk, for people at the right time, which is during the real estate transaction process. That is a critical time. And recognizing that the state during Hurricane Harvey recovery, with support from the real estate industry, because they want transparency around these issues, they use the most advanced hazard risk disclosure regulation as a baseline. That was California. And then we went above that. And so now today, if you're going to buy a home or even rent a home in Texas, you need to know if you're not just in the 100-year floodplain, but the 500-year floodplain. Are you in a reservoir pool? Have you had a history of flooding? Now that's limited to the owner. So if the owner owned it for 5 seconds, that's problematic. I'd like to see for every parcel in this country, the ability of an interested party to get online, click on a parcel, put in an address, and see a complete risk disclosure analysis, including when and the amount of flooding that occurred, if it had an insurance policy, or even if a damage assessment was done outside of NFIP insurance, because that's going to help people make better decisions. And rather than regulate people out of the floodplain, I see this happen. People will take themselves out by their purchasing decisions. Not a week goes by that somebody, a friend or colleague, calls me up and says, "Hey, Sam, I'm looking at this home. Can you do a risk analysis?" And I usually do that for them as a favor. There's no reason we can't automate that so that everyone can get that expertise anywhere in the country.
Thank you. And last question, Mr. Quinn, briefly, if you would, and sorry to do that to you. You mentioned your new rates under risk rating 2.0 are going up despite elevating your house by, I believe, 10 feet. Do consumers have enough information now to understand how mitigation decisions affect rates in the new system?
I think they have a vague understanding. People understand that, if you elevate, obviously, it will make a huge difference. I mean, I made it a point to raise my house 10 feet. I don't mind getting flooded once. I never expected it. My home had never been flooded since it had been built in 1955, but I made darn sure that it was never going to happen again. So certainly we could do more to educate homeowners on the need for mitigation and how it would impact their premiums. We think that is a big factor. And we've certainly talked about, Senator Toomey has talked about houses that did not proceed with mitigation and the impact of that. And I can't imagine who would ever do that. Because again, for my situation, sir, once was enough. And I certainly wouldn't want the taxpayers to have to pay for any more than that.
And I think your comments from a very personal position on what it means when you lose your home and the days, weeks, months, years of putting your life back together were really poignant. So thank you for your contribution to that. Thanks for the witnesses for being here today. Senators who wish to submit questions are due 1 week from today. The questions are June 23rd. For the witnesses, you have 45 days, to respond to these questions. With that, the hearing's adjourned. Thank you.